Good morning, my friends. This is Cheryl Spengler. Today's topic we're going to talk about is IRS liens and self-releasing and how to get an IRS lien removed off of your real estate, off of your property. So if you are someone that has not paid taxes for whatever reason, medical crisis in your life, a situation that's caused you to be unable to pay the amount of taxes owed, there are many times the IRS will reach out to you to try to get some kind of solution before they put a lien on your physical real estate property. So to say I didn't know I owed or anything is just not possible. It's absolutely not possible. Don't get caught up in some phone call. Don't get caught up in some email. They don't email you. They don't call you. They mail you. And they know where to mail you because you filed taxes. If you haven't filed taxes, they simply mail to the last address you filed taxes. And I wanted to walk through what's been happening with a client for the last 13 months. So 13 months ago, I was introduced to a client to help her sell her distressed property that was full of mold, which I'm going to do a complete other video on, and have her come on the podcast. So many things to say about that property, but she had two IRS liens on her property, and one was $69,000 and one was $14,900. And something that I wanted to mention, if you're not aware and you have had a lien from the IRS put on your real estate, that it is only good for 10 years. Meaning, I'm looking at a document right now that is a notice of federal tax lien, which would be mailed to your address that you filed taxes with. And there's a column that says last day for refiling. So the last day for refiling is 10 years from the day that they file the tax lien on your property. And at that 10-year mark, your tax lien self-releases. There's nothing for you to do, no phone call to make, no email to send, no written documentation you have to do. It self-releases. And a lot of people don't know this. However, from the 10-year date of the moment they put the lien on your property, they have 30 days from that last day for refiling date to refile. They have 30 days after the 10 years ends to refile a new lien on the same property or whatever. And something that most people aren't aware of is if during the 10 years that you have this lien, and let's say it's coming up on like the month it's getting ready to expire, and you're thinking, wow, it's going to expire. It's been on here for 10 years. I can sell my property. Yes, you can. However, 3 things to be aware of. If during the 10 years you initiated a bankruptcy, or if during the 10 years you initiated an offer in compromise, from the date you initiated a bankruptcy to the date you either dismissed it or it got discharged, that time period, same thing with offer in compromise. From the date you start an offer in compromise with the IRS to the date it either gets forgiven or they deny you, finally deny you, even if you go through this 2 to 3 year period where you file an offer, you refile an offer, you get to an appeals court, you appeal to the final day that you either get approved or denied, either one of those, bankruptcy or offer in compromise, during that time period, those months, they get added on to your 10-year last day for refiling. So if they file a lien on your property and 5 years into it, you either do a bankruptcy or offer or any time in the 10 years, the time period you're in the bankruptcy or in the offer and compromise, those months get added to the end of the 10 years. It extends the opportunity for the IRS to refile an IRS lien on your property. So if your last day for refiling, let's say, for example, is March 30th, 2024, you're like, well, it's June. Okay, I'm free and clear. It released. Yes, it did if they did not refile within 30 days, self-release. However, if at any point during the 10 years you either filed bankruptcy or offer in compromise, even though the notice of federal tax lien states the last day for refiling is, in your example, March 30th, 2024, they have the months added on to that 10 years if you were in bankruptcy or offer in compromise to refile. This does not mean it absolves you of the debt. there is a 10-year statute of limitations for your debt owed to IRS, okay? But this federal tax lien self-releasing will happen within 30 days of the date of the last day for refiling, unless you have filed a bankruptcy at any point, even if it was dismissed, or an offer in compromise, even if it was denied. They will tack on those months you were in that to the end. And all this means is that they have to keep up on all the records to know to refile, okay? It's not like you're going to call them and say, oh, you refile. They have to keep track. So if they don't keep track, it doesn't matter how many months are added. If they don't refile, then you can sell your property. But most likely when you sell your property, you have to actually reach out to the payoff department, the payoff lien department of the IRS, and get a payoff, a formal payoff on their letterhead, which states exactly how much you owe. And then the title company receives that payoff just like they receive a mortgage payoff, and they pay it. And then within 10 to 15 days of receiving the wire from the title company for the balance, you get your lien released with the county you live in, and you're free and clear. And if they are asked to do a payoff and they somehow go back through your records and say, oh, even though this last day for refiling has not passed, let's say, because if you're asking for a payoff, that means it has not passed. Or if you try to sell after the 10 years, I don't know. I'm just saying, like, you have an opportunity to have it refiled for however many months you were either doing a bankruptcy or offer in compromise. The other thing is they list all, just to give you an example, we have been trying to get a payoff for months, and there are 2 documents. This is a confusing thing to people when they go to either have a third party help them or a title company help them get the payoff or whatever. It could be a long drawn out process, or you literally could get it in 7 days. If you are looking to get your payoff of your lien on the formal letterhead, please make sure that you fill out not just 1, but 2. Actually, there is just 1, but there's this confusion out there on this 88, I believe it's 8828. Let me look it up real quick. It's like the document that you are giving a third party the ability to request your payoff needs to be filled in absolutely completely, never electronically signed, only wet signature, which means with a pen. And there are 2 8828 documents. Let me just look at this a second. And one of them is the actual instructions. Let me just look this up real quick while we're doing this. There are 2 forms. Do not be confused. In order to get a third party, like a title company or some other person you may have hired, to get a payoff for you. Or you can do it yourself, actually, online through the irs.gov. And it's a Form 8821, Tax Information Authorization. Tax Information Authorization is for you to give some third-party person the ability to request your payoff. This is if you are scared to do it yourself, don't have access to the online irs.gov website, which I think everyone absolutely at this point should have. Go create your account. If you don't know your account, know your password, create an id.me password, have it, know where it is, know where to locate it. This is very, very, very important, because you do not want to be you do not want to be stuck with a third party having access to your IRS transcripts, files, and content without you having access. So the 8821 is what you would fill out for a third party to get this payoff information, like a title company. But there are 2 8821s. One is the explanation of how to fill out the document, and the other is the actual document. And there is a misconception right now. Sorry, title companies, but you're not doing us a favor, because when someone wants to get their payoff, sometimes a homeowner is sent the 8821 information document explaining how to fill out the 1-page 8821, but they never send the actual 1-page 8821. This is just something that I encountered. It was super frustrating and caused us to wait a delay of 60 days where we could have got payoff in 7. Anyway, always do your own research. Always go to irs.gov yourself. Look into it. Never count on any third party to be the go-to. Always, always research yourself. So if you have any questions at all, By the way, I have taken the enrolled agent course with the IRS, which simply just, in my opinion, just I want to know all of the things that they're doing, the schemes. I keep up on IRS scams, actually, just to make sure that none happen to me, and also to warn homeowners of distressed properties. There always seems to be some attachment with IRS on a lot of these distressed properties. There is one other thing I want to mention to those people out there who are renting, okay? You're renting a home. You do not own a piece of real estate. And somehow you have also not paid your taxes and you have a lien put on in the county you live. It is possible to get a lien placed in the county's records for the county you live in where you rent. And just to explain this briefly, if you do not own real estate and you have not paid taxes and they have tried their best to get you to do some kind of payment plan, and eventually they get to the point where they're like, we're going to put a lien out. Well, you're thinking, well, I don't own any land. I don't own any property. How can they put a lien on me? Well, they technically can't if you don't own real estate. Okay, they don't lien your car. They will levy your bank accounts, which means they will find your bank account. If you've ever paid them at any point with that bank account, they will know what it is, and then they will just take the money out if you do not sign up some kind of payment plan. But they will still place a lien in the county you live in your name at the address you rent. This does not mean that the person who owns the property gets a lien put on their property, okay, for you. It just means that the last time you filed taxes, you had an address. That address may be a rental, and that's what they use as to where you live and what county you live in to file the tax lien in the county. And it is attached to that address where you live simply because that's where you filed taxes last, but it is not attached to that property owner because obviously it's not his tax bill. They don't own it. I mean, they don't owe it, and you don't own the house. But this is something that probably no one's ever talking about, which is what happens when an IRS puts a lien or states that you have a lien on you and you don't own a property. They just simply find your last tax return you filed, whatever address you had, even if it's a rental property, and they simply file the lien in the county that you last were residing when you filed taxes. But it does not mean that the property owner now is responsible for your tax lien. It's kind of weird, but it shows up, but it's really not on anything. And the next step for the IRS then would be to levy your bank account. So pay them something, pay regularly, whether you're paying $100 or $50, pay regularly, and you will not get a levy on your bank account. Better yet, set up a payment plan. And if you owe less than $50,000, you can set up the payment plan online yourself. If you owe more than $50,000, you have to call in to set up a payment plan. And when you do set up the payment plan, sorry to get all about this, but they stretch it out to the 10-year. They figure from at what point did you last pay, or that you owe, whatever year you owe, however many years ago, 2 years, 3 years, 4 years. They can only do the payment plan for 10 years from that date. And so if you're 4 years past due, then they will only take the amount you owe and string it over 6 years remaining from the 10. And then that will become your payment. So anyway, that's a whole nother podcast, but I just wanted to throw this out there. If you're renting, like, what happens? So comment below if you've ever encountered anything related to this, or if you have anything to add to this podcast.